Hi, accounting class. Welcome to our second video, lesson 12.2, determining payroll tax withholding. So before I get started, let me just say there is a lot of information in this lesson. There's a ton more information than what is even processed in the work together and on your own. So stay with me and I'll provide as much information as I possibly can. Okay, so our targets for today are to demonstrate the process for determining federal income tax withholdings. We're going to demonstrate the process for calculating Social Security and Medicare taxes and explain the benefit of funding medical and retirement plans with pre-tax contributions. Again, we're looking at this from an accounting standpoint, but this applies to you personally from a personal finance standpoint as well. So if you have any questions, you'll have to let me know. So before we get started also, federal income tax is withheld from employee earnings in all 50 states. Federal income tax. Also, most states have state taxes. Certain cities have city taxes, and then there also can be county taxes. Where we are, for the most part, we pay federal and state income taxes. But, let's use Parker as an example. He would pay a city tax in Chicago. Okay? So income taxes are withheld by your employer, and periodically they are sent to the respective government agencies. Depending on the size of your business, you may have to make monthly payments, or some make quarterly payments. So that's something to take into consideration. Okay, so payroll taxes. What are payroll taxes? Taxes based on the payroll of a business. Okay, so these payroll taxes are based on employee earnings, like what we figured last section in 12.1. So businesses must maintain accurate records and detailed payroll records. If there are errors, it could cause incorrect payroll tax payments, and then government agencies could assess penalties not only to the employer but potentially the employee. So that's something to pay attention to. And just know that these payroll taxes that are withheld by the business represent a liability for the employer until they are paid to the respective government agency. Okay, so a liability is just that. Would it be payroll tax liability? Okay. Right, moving on. So the Employees Withholding Allowance Certificate. I'm going to have to bounce around here because the withholding certificate has changed. So I have to show you the old way because it's still an acceptable form, but then I also need to show you the new form because it is a little bit different. All right. So what is a withholding allowance? It's a deduction from total earnings for each person legally supported by a taxpayer, including the employee. So that's a withholding allowance. So the amount of the federal income tax withheld from gross pay is determined by two things: marital status and the number of dependents. And that, for the most part, is still true today. And basically, this is how it works. Again, very basically. The larger the number of allowances on the old form claimed, or the number of dependents, the smaller the amount of income tax withheld. So basically, think of it this way. The more mouths you have to feed, the less tax they withhold from your paycheck, okay? Because you need more money to buy food for those mouths to feed. However, regardless of what your withholding allowance is or how much you have withheld paycheck to paycheck, your total tax liability as a person does not change. It is based on the amount of money that you make in a year. You are just telling the government how much to withhold every paycheck, okay? But regardless of how much is withheld, if you have too much withheld, you will have a refund at the end of the year. If you have not enough withheld, you will have to pay. You will owe taxes, okay? The ideal situation is for the amount withheld and the amount you owe to be the same, so that it's a wash. And that's what this new W-4 form that we're going to talk about in a minute is supposed to help with. Okay. Let's see. So most employees are required to have federal income tax withheld. There are a few exceptions, and that means that you would have an exemption from federal income tax withholdings, and that would be for low income or part-time employees. Okay, but for the most part, everyone would have federal income tax withheld. Okay, so a payroll deduction is any amount withheld from an employee's gross earnings as a payroll deduction. You can basically lump payroll deductions into two categories. The first one is a mandatory deduction, which would be your federal, state, local income taxes, okay, as well as your payroll taxes, which we'll talk about, Social Security and Medicare. And then there are voluntary payroll deductions, and those would be healthcare premiums, retirements like 401k or IRAs, or charitable contributions. Those would be considered voluntary deductions. Okay, so again, the Employees Withholding Allowance Certificate, this is the old Form W-4 that was around for years and years and years and years. With the new tax laws that went into effect in 2019, the government, the IRS, actually the Internal Revenue Service, came up with a new employee withholding certificate starting in 2020. So each employee is required to complete a Form W-4. Those of us who had completed one prior to 2020, it's still in effect. Our old ones are still in effect. The only time you must fill out a W-4 when you're first employed. You can update it at any time in your employment. But with the new form, you don't have to fill out a new form. They can still use the old form. So it's up to you as the employee. So we'll go through how to fill this one out, and then I will jump to the new W-4 that's out today. Okay, so again, the W-4, the Employees Withholding Allowance Certificate, you would put your name and address. This is filled out by the employee. Your employer must supply this to you, and you must fill it out. So you put your first name and your middle initial, your last name, your Social Security number. You must have a Social Security number. Everyone should get one of these after they are born. Your home address, and then your city, town, state, and zip. You would check a box if you're single, married, or married, but withholding at a higher single rate. And okay, then the next line, the total number of allowance you are claiming. So in this case, the person was claiming 4 allowances. So basically, this would be like a dad, John P. Butler, who's working. He has a spouse, so that makes 2 people. And then he probably has 2 children, so that would make 4 people. So that's basically what those withholding allowances are. On the other hand, I've got myself, I've got my husband, and then we have 4 kids. So on my W-4, I could put 6 withholding allowances. However, because I wanted to have more tax taken out of my paycheck now, as opposed to having to pay at the end of the year, I put 0 down. Because, again, they would take out more taxes now, and I would pay later. But again, the ultimate goal is for how much tax you have withheld to match exactly how much tax you owe, so that you don't owe anything, nor do you get a big refund. Because if you get a big refund, you could have been A, spending that money, or B, you could have been investing that money. So anyways, additional amount withheld. You can have an additional amount withheld. In this case, John P. Butler has 0 withheld. And for those low-income people, that would be for number 7, when you can claim an exemption. If you meet both of the following, you would put that here. So the most important thing next is to sign it and then date it. Again, if you have to fill out a W-4, I would fill it out in pen. Pencil can be erased. Okay? Hopefully you don't have any questions on the withholding allowance. Now, I'm going to flip over to... Okay, so here's the updated form. I don't think I can... let me make it a little smaller for you. That's about the best I can do. Okay, So again, this is the new form, Employees Withholding Certificate. Again, very basic, same information. You have to say whether you're single or married, filing jointly, or a head of household. These are all filing statuses that you can claim. Then there's a lot of detail here, so the more detailed you have to be in your taxes, the more detailed you need to be on your W-4. And again, the idea is so that there's a match between how much you're withholding and how much you will owe at the end. Okay, that was their ultimate goal. So if I scroll down here, again, this is a 4-page document, so there's very detailed information. I will include a link to this document in Canvas. So, but the most important thing is for you to fill out the top part, check which box applies to you. It says only complete steps 2 through 4 if they apply to you, so that'd be 2, 3, 4. And then if they don't apply to you, you basically sign here and date it. And then the rest is for the employer. Okay? But again, I will include this for you. I'm also going to include an article from Kiplinger, 10 things every worker needs to know. I don't think I can make this any smaller. Doggone it. Let me see if I can. Nope, it's not working. But I will include this article as well. There we go. Okay, I will include this article as well because it has some really good tips on and information about the difference between and what's new about the 1040 or the W-4 today. Okay? So let's go back because I'm running. Let's go back to our PowerPoint. Okay. So the next slide is the tax table. So this is what your employer would use to figure out how much tax to withhold. It is based on, again, how you're filing, if you're filing as a single or a married person. It also depends on how often you get paid. So again, this one's for a semi-monthly payroll period. So federal income tax laws are written and passed by Congress, and the IRS, the Internal Revenue Service, is the entity that administers these tax laws. So an employer finds the amount of tax withheld in the withholding tables. They're revised each year. So it's publication 15. Actually, I think I have this pulled up for you here. So this is publication 15. I'm also going to share this with you in Canvas, but this has a lot of really good information about taxes and withholding. And this is on the IRS website. Okay, let's see. Here is the employer's income tax withholding for married persons. Okay, so for instance, if I'm married and I made between $1,460 and $1,480 and I was claiming 4, so based on that W-4 that we just looked at, and I was claiming 4 allowances, I would have $29 of tax withheld to go to the federal government. Okay, so there's tables for the various pay periods for monthly, semi-monthly, bi-weekly, weekly, and even daily. Okay? Okay, I'm going to keep going. So employee Social Security and Medicare tax. Actually, I'm going to stop there, and then I'm going to finish the talk about employee Social Security and Medicare tax on the next video, and then I'll probably go right into the work together. Okay? So sit tight, and I will be back shortly.